Top of the morning, it's your boy Soap Guys TV, man. It is Thirsty Thursday. Let's get into this crypto news. I just dropped a gem on the Patreon, so if you're interested in Super Deej and stuff like that, make sure you guys check out the link in the description. Top of the morning, but let's get into it, man. So what's next? What's to look forward to? You can see here, we talked about this in the live. It's literally 41 days, family, into the next FOMC meeting. On May, they're already starting to price in a 60% chance of no hike, so a 60% chance here of a pause. And again, I know a lot of people was looking at the different metrics inside the space, like the fear and greed, but I'm gonna just tell you guys to hold on tight. We are seeing the Dixie here, the DXY, fall a little bit, so we want to see the DXY fall under 100. But again, family, we putting ourselves in a position as I'm starting to see altcoins start to pretty much recover after yesterday's sell-off. But why did we sell off? Why did crypto sell off on a 0.25 federal rate hike when we knew it was coming, family? So let's get into it. First and foremost, why was Powell dodging questions? All right, Powell said the banking was under control. We took a dip because Senator Janet Yellen came out and said that federal bank regulators are not considering any plan to insure all U.S. bank deposits. So this was huge because we know that Jay Powell came out and said, the banking situation was taken care of. Everybody will be insured, et cetera, and then Yellen pretty much contradicted everything he says by saying federal bank regulators are not considering any plans to insure all U.S. bank deposits. So a little fear was in the market after we got that news. And you got to understand what credit tightening and bank failures does for the economy. Credit tightening and bank failures can harm the economy in several ways. This can limit access to borrowing, increase borrowing costs, lead to business failures and job losses, decrease investments, erode confidence in the financial system. These factors can cause economic growth to slow down and have a negative impact on consumer spending, business investments, and overall economic output, family. So basically, we got 0.25 instead of a 0.50 because of the credit tightening and bank failures, which is very, very similar to a rate hike. So because of these bank failures here, we're getting credit tightening. And what that does, family, is that reduce access to credit. When credit is tightened, it becomes more difficult for businesses and consumers to borrow money. This can result in reduced spending and investment, which can slow down economic growth, which they want to do. They actually want to slow it down to tame inflation. Like, they literally want people to lose jobs. I did take the live down because I'm not trying to make no enemies in the wrong place, man. And I felt like I was, a little too going a little too hard on the people in the higher places. So I took the live down, but we're really pretty much covering everything that we covered in the live in this video. So make sure that you like, subscribe. Increased borrowing costs. If interest rates rise as a result of credit tightening, borrowing costs will increase. This can make it more expensive for businesses to invest and for consumers to buy homes, cars, and other big ticket items. And that's why we went over that we're waiting for a little bit more capitulation here in the real estate market. I know it's a lagging indicator, but when I talk to a lot of realtors out there and when I do my work, they do indicate that the prices for houses and the interest for houses is still a little bit high. So it's still a little bit pain to happen maybe in the future with the housing market. You got to expect business failures and people to lose their jobs, and of course bank failures and decreased investment. So credit tightening can also lead to decreased investment in the stock market, which can cause the prices of stocks to drop. This can reduce the wealth of investors and lead to a decrease in consumer spending, which again they're trying to do. They're trying to pretty much knock out all of that stimulus money, all of those loans money, you feel me, decrease the consumer spending, which will help tame some of that inflation. But the market just doesn't believe Jay Powell. That is the thing. The market doesn't believe Jay Powell. They're actually calling the bluff, fam. They're calling the bluff. You can see the S&P and the Dow still rising. The market just doesn't think he can afford to continue to raise these federal rate hikes. As you see, we're getting a 55% pause. So what does all of this mean, family? Well, what I will be looking to is I will be looking to invest into the strongest projects. Be looking for another video where I'll be talking about the top 5 strongest crypto projects as far as strength right now in the crypto market. You can see here that the fear and greed index is 57, so it did lower, family. And again, I know a lot of people was looking at the dip. They was looking at the Bitcoin dip. They was looking at the Ethereum dip. Like, oh my God, are we going back to zero? Family, we're not going to zero. Okay, like Bitcoin is literally holding strong at 27.5, and as long as we're over 26.8, you feel me? Technically, we're still in a uptrend and bullish momentum. So keep an eye out on that. But again, nothing to be too worried about here, because we are seeing a Dixie fall, and that's what we want to see. We want to see the strength of the dollar fall, and we also want to see oil fall. We want to see these things fall because we want to see inflation showing signs that it has hit its pinnacle, and we can start to DCA on the way down as the traditional market and crypto market looks to rebound. But back to this, to close out the video with this, pay attention, family. The next FOMC meeting is in 41 days, and the market is already starting to price in a pause. So I think that's huge. I think that's huge. I think the market is going to call Jay Powell's bluff. I think the market doesn't think that he can continue to tighten like this without breaking something. And hell, Janet already came out and said, hey, you lose your money in them banks, you might not get it back. All right, so this is the opportunity. This is the opportunity for generational wealth. You guys be looking for that video where we'll be talking about the top 5 strongest projects in the crypto space. Make sure you like and subscribe. I do apologize for having to take that live stream down, but after watching, I was like, you know, I don't want to go too hard on the elites, man. Not just yet. It's your boy Make It first. You feel me? Shout out to the people that was showing support, man. I really, really appreciate that. And leave a comment and engage. Let me know what you guys are doing. Are you DCAing? Are you all in cash? Are you all in? I like to know your sentiment and your opinion on the current crypto space. It really helps me with the creation of these videos. We keep an eye on we'll keep an eye on the Dixie, we'll keep an eye on the Tether dominance, and we'll also keep an eye on the strongest cryptocurrency projects. So we want to make sure we are investing into the right stuff. All right, family, so check it out. Videos coming out. Like and subscribe. It's your boy SoCost TV. Millie.